Hi everyone. Thank you so much for attending today's webinar on buying a home the smart way. We're so excited to have Cathy, attorney, and Lee Bialek, real estate agents from RE/MAX Northwest Unlimited, as well as Kelly.norton, one of our very own real estate loan officers, presenting to you today. They will go through the home buying process as well as the mortgage process. If you have any questions throughout the presentation, please use the questions feature within the GoToWebinar system, and we will try and answer all the questions at the end of the presentation. I will now hand it over to Kelly.
Miles.
Hi everybody, this is Cathy, the attorney, and I'm just going to talk a little bit about the topics we're going to talk about today. First of all, we're going to have Kelly from Andigo talk about reviewing your finances and considering the financing options that you have. This is what I call getting ready to buy your home. Next, what we'll do is go to step 4, doing your homework. This is the phase where you decide where you want to live and what features you'd like in your new home. Then we're on to hunting for the homes. This is where you would be until you find the right home for you. After that, you need to get a final loan approval before going on to step 7 by signing the papers and taking possession of your new home. Hopefully after today, you will know everything you need to know about the buying process. Now I'm going to send it over to Kelly.norton from Andigo to talk to you about home financing.
Thank you, Cathy. Buying a home is likely to be one of the biggest financial decisions of your life. It can be exciting, but you don't want to rush into it. You want to make time to educate yourself about the home buying process and avoid errors. We are here to help you through the home buying process. One of the first things you want to do is review your finances. A good way to start is by reviewing your credit history. You want to determine how much debt you currently have already and any other monthly expenses. Once you've determined your budget, you'll know what you will need to save for a down payment. Mortgage calculators can help you figure out how much you can afford. We provide a wide range of calculators for you to use to determine some preliminary numbers. These are located on our website. There are a couple of reasons why you want to get pre-qualified before you start looking for a home. One reason is that you will know how much you can afford and that the realtors will know that you are a serious buyer. You first will apply and fill out an application either online or with one of our loan officers. This will include information about the borrower, property information, employment, income, assets, and your liabilities. We will then run a credit check and process your application. In many cases, we can immediately credit approve your loan request. Once your application is submitted, a loan officer will let you know the amount you're qualified to borrow and will review with you all of your available loan options to help you decide which program best fits your needs. We will then issue a pre-qualification letter the same day, which you can provide to your real estate agent. This letter will show the dollar amount that you're qualified to borrow and is good for 120 days. It's just not the cost of the home that you need to consider. You want to also make sure that you have enough funds to cover your down payment, fees, and closing costs. There are a variety of loan products that we offer. We have fixed rate mortgages where the interest rate and payment will remain the same throughout the life of the loan unless you refinance. They come in various terms such as 10, 15, 20, and 30 years. Adjustable rate mortgages, this is where the rate is periodically adjusted and is tied to the index. For example, if you choose a 5-1 ARM, your rate is fixed for the first 5 years and then can adjust every year, also changing your monthly payment. FHA loans, these are insured by the Federal Housing Administration and feature low down payments. Many of you are first-time home buyers, and buying a first home can be both exciting and overwhelming. Our 5-5 ARM first-time home buyer promotion has many great features. The rate is fixed for the first 5 years and then will adjust every 5 years. With a minimum down payment of 5% and no mortgage insurance, this will save you money and give you a lower monthly payment. Some restrictions may apply. Another great tool to help you through the home buying process is Home Advantage. Through Home Advantage, you can gain access to all the tools and resources available that you would need to search MLS listings, connect with experienced real estate agents from top local brokerages, each of them were hand-chosen by Andigo, research neighborhoods via demographic information that includes schools, crime rates, weather, and more. And best of all, if you use one of our agents in our program, you'll save 20% off the agent's commission, which you can apply as a credit towards your closing costs. This is a great benefit of the program and will reduce your out-of-pocket costs. The average savings is around $1,800. As an added benefit of attending this webinar today, you will automatically be registered into this Home Advantage program. And now I'm going to turn it over to Cathy.
Hi everyone. Thanks Kelly, you did a great job. I know the financing part is always a mystery to people in the home buying process. So hopefully you answered their questions. The next thing we have up here is, I just like to put some interesting facts up here. This is a report that I get from somebody called Brian Bassini. He always does a nice job with these reports. If you'd like the full report, I just have 2 slides here. It's more like 11 slides. I can send that to you. After the program, we're going to have our phone numbers and emails. So if you'd like this report in its entirety, just shoot us an email and we'll get that out to you. But I do think there's some interesting facts. It's nice to know that versus last year, homes are selling a lot faster. They're selling overall at about 10 days faster than last year. This is because the inventory is lower around the country, and the sellers kind of have the advantage right now because the month of supply of homes on the market across the country is about 4.5 months. We say that a break-even number is about 6 months. Anything less is a seller's market, anything more is a buyer's market. So just keep that in mind when you're looking for your house. Now each area of the country is going to vary a little bit, so talk to your realtor and find out what's going on in your area. Another nice thing is in some of the pricing information, which we like to see, is over the last 5 years we have seen home prices increase. You know, we had the downturn in the market, and it's nice to see that we are on the upswing. We're not going up in big leaps and bounds, but for the last 5 years the prices have been going up. And overall, from September of 15 to September of 16, we've got about a 5.6 percentage increase, which is a really good factor. So I'm going to send this over now to my partner Lee Bialek, and he's going to talk about doing your homework and getting ready to find that house that you want.
Thank you, Kathy. Once your pre-approval is done, then you're going to have to kind of sit down and say, what am I looking for and what do I need to have? And I think we've got 2 categories here. One of those is must-haves, which is something you can't live without. The other one is what I'd like to have, which is kind of an option, but if it works out, that's great. So in here you can see the must-haves obviously have the price range and where it is and how big it is with bedrooms and baths, square footage, and garage and schools. Those are usually the main factors when people buy. The like to have could be an age of a property. Sometimes some people would like something a little more older with a little bit more character, and some people like the newer stuff, so it just depends. kitchen amenities, home style basement, yard, and fireplace are all kind of things that, are nice to have, but not a necessity. As far as the home value, there's a whole bunch of different ways here where you can see we have different opinions. The tax man certainly has his evaluation. He's basing it on that, and not necessarily what it's really worth, but that's his interpretation. Appraisals are something that we use by a fee appraiser, which is somebody that is licensed, that comes out and appraises the house based on comparables. And your Andigo loan officer is going to order that when you buy a property, because they want to make sure that you're protected and they're protected too. They're only going to use closed properties on these, and that's the most reliable source of information. You can also find value on some of the real estate websites, such as Zillow or Realtor.com. Those are, I would say, more of a ballpark kind of a value, just because they don't really know what's inside that house. They're just looking at raw numbers, so sometimes the values can be a little suspect on those sources. Comparable CMA is something that your real estate agent would do for you. They would provide you with an overview of that property using the closed sales, but also active sales to show where the market is currently in competition. Market trends are something that we always should be aware of if we're in an appreciating or depreciating market. Right now we're in a pretty strong appreciating market. And that's basically the different views on that. I'm going to send this to Cathy now to talk about the hunt for homes.
Okay, we're going to talk about the hunt for homes, and where you first start would be where Kelly started today. It's getting that price range, finding out what you can afford and what you're comfortable with affording. Then you want to look at your location and the parameters of what you're looking for in the house. Like Lee said, the number of bedrooms and baths. You're going to want to consult with a real estate agent who can set you up on a home search that will send you all the available listings in the area that you're looking for with all the amenities you're looking for. And when I sit down with people, I do tell them to consider all their options. You know, some people just want single-family homes, that's fine. But sometimes people think, well, I could also look at either a condo or a townhouse too. So if you're thinking you might go either way, at least you should explore the options. Don't limit yourself, and then you can make your decision after you've seen multiple properties. So one of the things that we're seeing nowadays is there are called short sales and foreclosures out there. And a lot of people ask me, should I consider these? And what I say is, let's just explore the difference between the two. So a short sale is when the seller is short of the amount of money that they owe the bank and what they can sell the home for in today's market. It's a misnomer, I say, to call it a short sale, because it certainly isn't short in the process of getting it done and closed. Sometimes it can take 6 months or even a year to get it closed. So that's one of the risks that you have to look at when you're buying one of these properties. You're never sure how long it's going to take, or if the bank is even going to allow the sale to transpire. With a foreclosure, it's slightly different than the short sales. These are going to be a lot faster because the bank has already taken the home back from the owner, and the bank is selling it. That's why they want to get it done faster, and it's a quicker transaction. But we always have to keep in mind that both of these sales are going to be as is. So when you see the house, just keep that in mind, that they're not going to fix anything and you're taking it in the condition it is. So make sure you do a home inspection and you know what you're getting into. I also like to say, if you're looking for these houses, that you should work with an experienced agent who deals with these distressed properties and knows all the risks and benefits to it. The risks, we talked about. The benefits are sometimes you can get a good price on them, but you need to make sure you do to go through all the things that you have to go to. The next thing is when we are looking at houses, I always say you want to bring a notebook or a clipboard and pen. When you're seeing houses, they all start to blend together. So I always provide our clients with a clipboard, and it's going to have the property descriptions on each house and a page for them to take notes on each house. They can keep these for future reference, because a lot of times we'll see a neighborhood and they love the neighborhood, but maybe this house had a bad location. So next time one comes up in that neighborhood, they can revisit and look back in their notes and go, oh yeah, that's exactly where we want to be. So it's nice to have your notes and keep them handy while you're looking. So then it comes down to when you've looked at all the properties and you've made your choice, you find the house that you think is right for you and your family, what you're going to do, we call it the signing considerations, or making the offer. So when you're making the offer, there's a few things you want to take into consideration in making the offer. The first thing is the home condition. Is it going to need repairs? Is it going to need some out-of-pocket expenses right away? If so, you should reflect that in the price of the home. Then you're going to want to look at the comparable properties in the neighborhood to see where they're selling at, and what's maybe on the market to see what else might be available for you there. After you're looking at the comparables, you'll find in that neighborhood generally what the percentage off of list versus the sales price is. And this can give you a guide, and that can vary dramatically from neighborhood to neighborhood. Some of them will come off 2%, some of them may come off 5%. But it'll give you kind of a clue to where you think this house might be priced at. The next thing to look at and to discuss with your agent is the home pricing trends. Are the prices moving up, or are they kind of slowing down? You want to see, are we getting into a lot of multiple offer situations because the inventory is low? If so, you might want to not play the game too long and lose the house to another buyer. Another thing you want to look at would be the taxes for the last few years, and making sure to see where the taxes are going. Are they increasing a lot? Then you just have to be prepared that that may be a trend that's going to happen. I also like to check to see if a house is in a floodplain, because if it is, you'll be paying flood insurance on top of your mortgage payment, and that can be an expense that you may or may not want. And the other thing is most homes nowadays come with disclosures. I believe most states have those now. And any disclosures that are filled out by the seller, you want to read and see if there's anything that they're telling you about the house prior to you moving into it. And at this point, what I'm going to do is turn this over to Lee, because once we find the house, we now have to negotiate the deal, and Lee will talk to you about that.
Negotiating the deal is one of the most important aspects of buying a home. You're trying to kind of meet everyone's need, and we call that a meeting of the minds. We've got to create a win-win situation for everyone, so that way, you know, it works out best. We find that price is not the only issue when you're negotiating a sale. It's probably one of the key issues, but there's other factors such as the closing dates and personal property and some of the other things that are on that contract. So everything needs to be taken into account when it comes to that. Discussing contingencies is another factor, but we're going to address that a little bit later. And we're going to also say that one of the things you can't expect is a counter offer. Everybody likes to start at a point where they are the most comfortable. Buyer is going to put down a price and terms that are acceptable to them, and the seller is going to want his. So you got to kind of expect counter offers. It's just the process. It's just a part of the negotiation process, and it's kind of, you have to take yourself out of that personal time and look at it almost like a business type transaction. Showing a commitment is another factor too. We want to make the seller feel like you're a really a solid buyer, and one of the ways we do that is with a good pre-approval letter that you're going to walk in with, so they know, number one, you are qualified. And the other thing too is we offer what they call earnest money. Most states will have some sort of earnest money opportunity there, and it varies from state to state depending on what's normal for that area. You'd have to talk to your real estate agent that's helping you as to find out what the norm is. Earnest money is just kind of a good faith process to show the seller that you are serious and sincere. In most cases, it can be refunded through some of the contingencies that are available. And again, your realtor will discuss what is customary in your area and state. Contingencies are a factor that I like to call them a parachute for you, the buyer, to kind of protect yourself in the process. It usually all happens at the beginning of the accepted contract process. One of the things that you want to do is hire a professional home inspector that is going to go through the property and provide a written report showing you the deficiencies of the property, and that way you know what to address. And if you can ask the seller for credit or for repair of these items, then it's usually, again, a negotiable process. The attorney's review, in some states that use attorneys, they have an opportunity to make modifications to a contract and protect the buyer's interest on that as well. Mortgage, of course, is going to be the financing process, which the property is always contingent on that, the ability to obtain the financing and also to meet the dates, because there's certain dates there that are involved as far as putting in what we call intent to proceed, and also a clear to close date, which means that the bank has fully approved you and now you're ready to close. So those are the main factors of contingencies. I'm going to pass this over to Katie, who will now discuss the mortgage process. Kelly, sorry.
Thank you, Lee. Once you've decided on a home, we will let you know what verifications are needed. Typical verifications include the purchase contract, pay stubs, W-2s, and bank statements. During this phase, we will order an appraisal to assess the property's market value and title documents which contain the property's details. An underwriter will review all of your information and verify that you are able to make the monthly payments. Once all the loan conditions are met, your mortgage loan will be cleared to close. We will then notify you and the loan is ready, and then we will assist you schedule the closing. Now I'm going to turn it over to Kathy.
Okay, and I'm going to take it to, once we're going to get our loan approval, we're going to sign and close the deal. So after you have your loan approval, we're going to get the closing scheduled, and you're going to review your closing document. I always say when you get this document, ask questions, because this is going to be the final amount of money that you have to bring to closing, so just make sure you know what's on that document. When we go to closing, I say to plan on 1 to 2 hours. Sometimes it's less, sometimes it's more, but that's a good plan to get it funded and have everybody get out of there. A lot of people wonder who's going to be at the closing. Generally at the closing table, it's going to be you and the sellers. Sometimes the sellers pre-sign and they aren't there, but there will be a closing agent. A lot of times the real estate agents from both sides will be there, and if you're in a state that uses attorneys, such as Illinois, then the attorneys will both be there. When you're at the closing, I always say to read when you're signing the documents. Know what you're signing. If you're signing something and you're not sure of what it is, this is the time to ask questions. So ask questions, make sure you know what it is, and then when you're done signing, they're going to hand you over the keys. And then you will have the access to your new home. I always say once you get the keys, this is when we still want to keep in touch with you, so I suggest you try to keep in touch with your realtor. Ask them for maybe an annual market analysis on your home. You did one when you were purchasing it to see where you thought it should sell for, but you should know annually what price your home is worth. It's a good thing to know. It's a good thing to keep up on the prices in your neighborhood. And a lot of people will ask me, well, why should I know now? And I said, well, if you put less than 20% down, you're paying private mortgage insurance. When you reach that 20% down, you can stop paying that. So it's a good thing to know when you hit that point, and you can eliminate that fee. So always check for that, and check for maybe some good times to refinance depending upon the rate that you got on your loan, or if you took an adjustable loan, maybe at some point you want to go to a fixed rate loan. What you do is you just pick up the phone and call your Andigo agent again. So we want you to enjoy the house. We want you to fill it with wonderful memories. And that's the whole trick of buying a house. So hopefully you learned a few things today to make your home buying experience less overwhelming and more rewarding and enjoyable. And again, if you want a copy of the full Buffini Real Estate Report, just let us know with a call or an email. You see our email and phone number up there. And thank you again for listening to us.
Thank you, Cathy, Lee, and Kelly.